Welcome to another episode of the Real Estate Market Minute. My mission is to help you better understand the latest trends in the U.S. real estate market and share with you my analysis and industry expertise. I want to help you gain an advantage and feel confident whenever you're buying and selling real estate. I'm your host, Mark Salib. I'm a passionate real estate professional, advisor, and investor, and I love what I do. Follow and DM me on Instagram at The Salib Group. Send me an email, mark@thesalibgroup.com. And as always, thank you for tuning in to today's show. So, inventory is rising. Homes are sitting on the market much longer than before, and sellers are actively cutting their asking prices. So, why isn't the housing market just crashing? If you only looked at supply, if you looked at some of that data, you might think home prices should be falling a lot harder than they are. But it's not what the data is showing. And I hear people talking a lot about waiting for a crash to happen. But why? Why are they thinking this if the data is saying otherwise? You know, the market has weakness. Let's not sugarcoat it, right? But there's a difference between weakness and straight up panic. Realtor.com's April 2026 report shows active listings rose 4.6% year over year. New listings rose 1.1%. Median list prices fell 1.4%, and homes took 2 days longer than last year to sell. But check this out. Despite all that data that indicates clearly that it's turning into a market in which inventory is rising, prices are falling, homes are taking longer to sell, housing inventory is still 12.5% below pre-pandemic levels. So yeah, supply is going up, but from very low levels that we had before. So it's not getting into an oversupply condition. Okay, so I'm going to break this down regionally as well, but I want you to understand the whole picture. Because inventory, yes, it's rising, but it's nothing like what we saw when we actually saw a housing market crash in 2008, when we were just flooded with desperate, the keyword desperate sellers who needed to get out fast and sell, or had no choice but to sell. Okay. Now, regionally, okay, this is important because, you know, I talk about national statistics, but I feel at least the need to break things down regionally. Obviously, real estate is clearly, you know, all markets are not created equal, and local markets and neighborhoods, it's all different. It's hard for me to get into every market, but if I cover the regions, it at least helps you understand. All right, let's look at the Northeast. Okay, active listings are up 9.3%. But get this, they're still 51% below pre-pandemic levels. So yeah, better inventory in the Northeast, but it's really tight in the Northeast. Okay, that is an extreme low compared to what we saw prior to 2020. In the Midwest, active listings are up 11.5%, but still 37.5% below pre-pandemic supply levels. Okay. Now, check it out. The South and the West are a little bit of a different story. In the South, active listings are only up 1.8% year over year. So that's a little bit. But here's the one thing about the South. We're now actually 3.1% above pre-pandemic levels. So there are parts of the South that are, call it closer to normal, or even maybe a little bit oversupplied. Okay, that is important to note in the South. Now check this out in the West Coast. Active listings are up 5.8% year over year, but 10.8% above pre-pandemic levels. So the Western markets are going to feel a little bit softer because the supply is starting to tip into a bit higher than what we've seen historically. That's how much supply has come into the market in the West over the last few years. Okay, so where's the surprise here? The surprise is that Realtor.com says, you know, median listing prices are falling like we talked about, But Redfin says in their March 2026 National Housing Overview that the median sale price was up 1.1% year over year. Again, this is national. Okay. So what gives? I don't see a housing crash. Do you? I see price growth cooling, and I see sellers adjusting to a different market, but it's holding itself up pretty good. All right. What's going on with sellers? And this is the real point here, because this is what I see all the time, right? I work with sellers. I'm working with buyers. I'm working with investors. And I notice all the time that sellers just never have to really sell, at least for the most part. Every situation's unique. But what I've noticed from sellers, and maybe you've noticed the same thing, they're just not that eager. They're tough to negotiate with sometimes. They take their time getting back to, your offer or your counter offer. Whether I'm negotiating myself, if I'm helping an investor, helping a buyer, or even representing a seller, I just keep getting this attitude from, a lot of them. I might sell, but I don't have to. That mindset they have is interesting. And I get it. The data shows it too at a macro level. A lot of sellers don't have to sell, right? I mean, they're just sitting on these really low mortgage rates, and they've got, massive equity in their houses. They're not being forced to sell. They're not being forced out of their homes, out of their situation. The job market's strong, right? Labor market, unemployment's low. Everybody's pretty much working. So, listen to this. The Intercontinental Exchange, right? It's often referred to as ICE. It's a major financial data and analytics company, and they track mortgage, housing, a lot of property level data across the United States. Their March 2026 mortgage monitor showed homeowners still hold $17 trillion in total equity, with about $11 trillion available for withdrawal. I mean, that is staggering, right? That's a lot of wealth out there. So a lot of homeowners, most, have quite the cushion, right? They can tap equity through home equity line of credits or home equity loans. What do they need to sell for? And the Intercontinental Exchange reported that homeowners already withdrew $205 billion in equity in 2025. That's the highest annual they've done in 3 years. So homeowners are using equity as a tool, as a financial tool. They're not thinking, oh, I need money, I better sell my house. They're thinking, no, I got nowhere to go. I mean, prices are too high, rates are too high. I'm sitting on a low rate. I got great equity. I'll just get a home equity line of credit if I need to for financial help, or as a tool, or as a tool to use to update my home, or heck, whatever they want to do with it, right? Okay. There's another important part to this now. It's called what I call the low rate lock-in effect. All right. And this is why the market feels frozen. All right. So we talked about sellers, and they're sitting on those mortgages that they've gotten anywhere from 2020 to 2022. Listen, even if you go back to 2014, you're sitting on a lot of sellers sitting on even 4 to 5% rates, which is still really, really low. And much lower than today's market. So even if they did want to move, right, they'd have to give up that cheap mortgage, and then they got to buy again at a much higher monthly payment. Doesn't make any sense, right? So, when you think of the seller psychology, a normal weak market, that creates a lot of pressure, right? Like if you're in a market that's, I need to sell market, but you're not. You're in I would sell, but I don't want to give up my monthly payment. And I got too much equity. I don't need to, right? So that's why inventory keeps rising very, very, very slowly. But it's not it's not panic. It's not a panic supply. And we may not see that. If you're waiting for a housing crash to buy, you might be waiting for a while because inventory is rising. But I'm telling you, sellers aren't desperate to sell. And you see more homes coming to the market, and you see negotiations getting better. But sellers, they got too much equity, too little mortgage pressure. It's not going to cause any serious downside, at least in my opinion, at least for the time being, at least for the near and maybe even intermediate future. Okay. Now, if you are a buyer of homes, it's good because you do have more choices than you had before. You got a little room to negotiate. I mean, there are price cuts going on out there. Homes are on the market longer, but don't assume, if you're a buyer, don't assume every seller's desperate. A lot of sellers just say, forget it. I don't want to sell my house anymore. Or I'm not going to take this little. I don't need to sell. Again, for the most part, every situation's unique. All right. I will say this, if you're a seller, look, when you see all these price cuts, it means you're not pricing it right. If you have to price your home and then cut the price and keep cutting the price over and over, it means you didn't price it right from the beginning. So you got to get realistic and price the property correctly from the beginning. And you won't keep seeing all these price cuts. Now, I mean, if you're an investor, look, I think there's opportunity. But it's not everywhere is cheap and this whole market's wonderful and I'm going to get a great deal everywhere I look. No. It's find the pockets where inventory is rising, where days on the market are increasing, and sellers are finally looking like they want to negotiate. That's where you get a deal. Actually, go back and listen to the episode. I broke down the report from Realtor.com. The title of the episode was Only 8 Markets Favor Buyers Right Now. Here's why. And it's really good because Realtor.com tells you, look, these are where the buyers markets are. And there weren't many of them. I think it's, as the title says, it's only 8. But these buyers markets are probably where you should be focusing right now. All right. But look, bottom line, there's no crash going on. There's no crash. Show me where the crash is, because I don't see it. And I don't understand why anybody would say that. And I don't even understand what you're waiting for, because it's just, to me, just a normalization. It's just, there's pockets of weakness, but if you're waiting around, I don't know. I don't know if you should. Right? All right. I mean, the data, look, to me, the data just shows a shift. It's a different kind of market. The sellers have way too much equity to panic. They have low payments. Unless something drastically changes. And it's got to be a really drastic dynamic change. Just because you see rising inventory and you see price cuts, it doesn't automatically mean there's a real problem or there's an impending crash. It just could mean we're shifting to a different, more normal market. Before we end today's show, stop what you're doing and subscribe right now to Real Estate Market Minute Plus. Listen to all episodes ad-free. Get exclusive bonus episodes and content, and help support the show's growth, longevity, and future improvements. Go to realestatemarketminute.supercast.com right now. You can also find the link in this episode's show description. Check it out. I know you'll love it. That is it for me today. Thank you so much for listening to today's show. And as always, if you have questions or need specific advice, ideas, or just some help regarding your particular real estate needs or situation, or if you're just looking to buy or sell real estate in Florida, well then DM me on Instagram at The Salib Group, or just send me an email to mark@thesalibgroup.com. Don't forget to leave a rating for the show, follow, subscribe, help others find the show, and be informed and educated about the real estate market just like you. Until next time.